Welcome to the KMG Fiduciary Partners Podcast. Here, we'll cover important topics on financial planning and asset management to help keep you informed and inspired for long-term success on your financial journey. Let's join the KMG team now for today's topic.
Hi everyone, welcome to the KMG Fiduciary Partners Podcast. My name is Rob Thompson. I'm a CPA and Wealth Advisor here at KMG. I'm here with Rick Kaiser, who's a CFP and Wealth Advisor. And today we're going to be talking about qualified charitable distributions, or QCDs for short. So Rick, do you want to go ahead and explain what a QCD is?
Sure. Basically, a QCD, or qualified charitable distribution, allows you to gift money directly from your IRA to a charitable organization, a qualified 501c3, in lieu of RMD. So let's just go over what RMD is really quickly. As a required minimum distribution is when somebody reaches an age and has to start taking money out of their IRA. Basically, if you think about it, the IRS has let that money grow tax deferred long enough, and now they want their income tax from it. So back in the day, a few years ago, up to a couple years ago, that age was the year in which you turned 70 and a half. So when someone would turn 70 and a half, they had to, based on the mortality tables, they had to start taking distributions from their IRA and pay income tax. They could do whatever they want once they take it out, but they had to pay income tax. So the IRS came up with a provision that said if a person wants to give that money directly to a charity, they can do so, and while it is not deductible as an itemized deduction, it's not included in income as an RMD. So it's a way for somebody who is an itemized filer otherwise to actually get an economic benefit. So what's happened is because the standard deduction has become so large, many filers are now falling into the standard deduction. In order to receive a deduction for your contributions, you must be an itemized filer, which rules out a lot of people today. Now, in 2020 and 2021, there was a provision that allowed for a $600 deduction for non-itemized filers, but that has gone away in 2022. The other change that happened is a few years back, the RMD age went to 72. So now in the year that you turn 72, you have to begin taking required minimum distributions from your IRA. There's some exceptions. You can roll it to the next year prior to April 15th, but in that case, then you have to take 2 years and 1 year. So let's just call it at age 70, the year you turn 72, you take your distribution. However, now for QCDs, they kept that at 70 and a half. So somebody who reaches 70 and a half, not the year in which you turn 70 and a half, but the day you turn 70 and a half, you may make a contribution from your IRA directly to a charity. It has to be a qualified 501c3. It can be a church, a school, something like that. It cannot be a donor advised fund. It needs to be a direct 501c3. Then you can actually take money from your IRA and not have to pay taxes, and it goes directly to the charity. Again, you don't get to itemize it again, but you do get an economic benefit. Something many people are going on right now is actually making contributions to their charity, their local church, and don't realize that they're not getting an economic benefit because they're not itemized filers. So it's a good tool. We use it quite a bit. In fact, we're in our process now doing a lot of year-end planning, and it's something that's, if you understand it, you can use it to your benefit. And charities like it too because it incentivizes people to make big gifts.
Definitely. So I think that's probably all the time that we have for QCDs today, but if you've got any questions at all regarding how a qualified charitable distribution works, or if it's something that might work for you and you just want to figure out how to even do it, feel free to reach out to us. That's why we're here. We're here to help and answer any questions that you may have. Otherwise, tune into some of our other episodes where we discuss things like RMDs and tax planning, which kind of go hand in hand with the QCD conversation here. So thanks for listening.
Thanks for joining us for this edition of the KMG Fiduciary Partners Podcast. We invite you to catch the next episode in our series for real-world advice from the KMG team. Follow us on LinkedIn at KMG Fiduciary Partners, where we'll keep the conversation going.